Oh, great. Well, thanks for joining us. Today, it's a real pleasure to have Mike Milken with us. Mike is a legend across finance, business, philanthropy, and his purpose-driven work has really spanned decades in multiple key areas of global progress and impact. He's well known for multiple things, and so when we were talking about topics to discuss, it was basically impossible to be able to fit it into an hour. It was almost like covering the history of the universe or something, given the depth of potential topics. In the 1970s and 80s, Mike drove large-scale innovation and democratized access to finance through a variety of things, including high-yield debt, backing private equity, new businesses across telecom, media, and other areas. He's been involved with various philanthropic efforts as well since the early 1970s with the establishment of the Milken Foundation for Medical Giving in 72 and started in education in 77 and 78. So he's well known for his work with the Milken Institute, which was established in 1991. But for decades before that, he was already driving lots of different areas of giving and, nonprofit-based progress. He also started Prostate Cancer Foundation in 1993. And right now, he's involved with two major initiatives, amongst many other things, of course, that he does, the Center for the American Dream and the Economic Mobility Alliance. And my hope is that we can touch about that. But again, there's so many topics to cover. And so thank you so much for joining us tonight.
Great, great to be here today.
Yeah. So I was hoping we could almost cover four areas. And again, we may not have the time for it. The first area was going to be a bit more about um, your early work in finance and how you got involved with various aspects of really sort of changing the finance world and providing this access to financing in ways that others that wasn't available before. A second section that I was hoping we could cover is a bit more about philanthropic efforts, giving, the Milken Foundation. Third area is almost like career advice and human capital flows, and the last is kind of a view of the macro future. So hopefully we at least touch upon all those things. An initial open-ended question is, what got you interested in finance? Why do you think there's an opportunity there?
Well, I really wanted to run the space program. When Sputnik went up, I wrote a letter to the President of the United States. NASA was being formed, DARPA was being formed. They were being formed so the U.S. would not fall behind. People that weren't alive at the time don't really recognize what the fear was. It was the middle of the Cold War, and if you could send this little thing up around the planet, you could drop nuclear bombs on everybody's house. In the 50s and 60s, you were building bomb shelters at your house, etc. And so I felt it was time for me then to run NASA. Um, I wrote a letter to the president, and he didn't respond. I was 11. Maybe they had held him back a little, but I had told him, I've been studying space travel through my Marvel or DC Comics for a long time, etc. Never missed a math or science problem. Could multiply numbers in my head faster than a calculator. Could do all these things, and I was well prepared. But that was kind of my plan for quite a while. I went to Berkeley at that time, actually, to prepare to run the space program later. And then on August 11th, 1965, I was home in LA, and something that became known as the Watts riots occurred. And the next day, I met a young African American man who told me he wouldn't have access to capital. His father, no one would loan him money because of the color of his skin. Seemed totally irrational to me. And so I decided to go back to Berkeley, change my major, and began to study credit. It was about 2 to 3 months later that, after looking at all the data, I discovered everything everyone said about credit was wrong. Whether you're the head of the Federal Reserve, whether you're the Secretary of the Treasury, people had no idea what they were talking about. And I would say it was a period of time when everyone had a strong opinion about everything. But most of my life, maybe beginning at 8, I used to question people, and no one ever did research. If you ask a person, where did they get that fact or where did they learn it from? someone generally told them. You could never find out who actually did the work. And so it was exciting. People were focused on 1/10 or 100th of all the companies in the world, and I could focus on 99.99% of all the companies in the world. And I felt once we provided access to capital to people with ability, that those companies that had the luxury of access to capital would undercome significant competition. And in the last 30 years of the 20th century in the United States, 62 million jobs were created in the private sector by non-investment grade companies and -4 by investment grade companies. So it kind of opened by 85, and it was very hard for companies with less talent to compete once you had an even playing field.
Was there a single moment that inspired you to focus on non-investment grade bonds and assets, or how did you come across this as a big opportunity or something that was available to do? Was
Well, why did this individual feel no one would loan him money because of the colors? It's getting pretty irrational. Or what your religion is, or whether you're a man or a woman. And so I guess the real moment came to reinforce my thinking in the next 60 to 90 days. I had checked out this data, these books. A man named Heckman had studied every single bond offered between 1900 and 1944. What happened during the Depression. And all the data showed you that the spread, the risk premium was greater than the risk. And so you had a higher rate of return. And so that was my strategy. I made the decision to go back east for graduate school because I could affiliate with the leading research firm. At this time in the late 60s in America, the financial firms were in serious financial trouble because of the delivery of a physical certificate. So if you bought a stock or you bought a bond and you were an institution, you didn't have to pay until they actually delivered it to you. So slowly but surely, all the institutional investors required delivery to U.S. National Bank of Oregon or something, that it would take 1, 2, 3 weeks to get payment. So they get free float. And then if they had misinformation, they'd send it back. So it might take a month. And so the interest cost exceeded the revenue at that time. And so the creation of the central depository, where you didn't move these certificates around, occurred in the next few years. And what I did is I offered to work on that in exchange for them publishing my research.
Hmm. And when you were at Drexel, I think you had to convince Tubby Burnham to let you set up a dedicated high yield department.
Well,
Was it?
we had set that up before the merger.
Hmm.
Um, Drexel was the number one white shoe company in America. The Drexel family had financed the Revolutionary War, put up money for the Panama Canal. The head of the firm, Drexel Stotesbury, was the second highest paying taxpayer in America when income tax came in the mid 1916, 17, 18 period. But the last Drexel had 4 daughters who all became nuns, and that was kind of the end of the Drexel line at that time. But they did have a man named Paul Miller and Clay Anderson, Jay Sheridan. They were the leading research firm. But Wall Street in the late 60s, early 70s had fixed commissions. So if you wanted to buy $1 million of a stock, you had to pay 1%. So it cost you $10,000. Today, it's close to zero. And so the sales part of were the most highest compensated people. Didn't necessarily provide much value, but they were the highest compensated. And I remember I wanted to go meet this individual that was the highest paid, 69 or 70. And they told me I had to see him before 10:30. I said, well, I have to see him before 10:30 because he plays squash after that for the rest of the day with clients over at the racket club. There were people at Drexel whose ancestors had signed the Declaration of Independence. So it was an interesting environment to come into under pressure from technology. But they eventually published my research. And my goal then was to invert what I would call the pyramid on Wall Street or finance. Instead of sales being the foundation, I wanted to have research be the foundation. And then you'd go from research to trading. So if you have an idea, can you actually execute that idea? And then lastly, you'd focus on marketing that idea. So fixed commissions went away. And by the mid 70s, I wasn't that popular with the sales group and the industry at that time. But the real value added was being able to do research and actually have some knowledge about what you're talking about.
As you were inverting how this aspect of finance worked, did you realize how important and large it was going to be? In other words, I feel like a lot of the founders that I work with, they start off on something, sometimes it feels like a side project or something adjacent, and then it turns out to actually be the main important thing in an industry, or it helps drive an industry forward.
I think that's a very important point. I would say if 500 companies are investment grade and 15 million aren't, you can understand what the market could be. And there was a period of time, I'd say the peak was the late 1980s when they were beating on me and others. And if you read Business Week or these other magazines, they would tell you we have to get rid of the disruptor at these companies. That outlier, the one with new ideas, they just disrupt the company and ideas. And so that went on for a couple of years and it went away. But my feeling was if you're going to create jobs, you couldn't have 10,000 people not have access to capital and two do. You know, in history, it's happened. If you look at history, the people that had the horse-drawn carriages in London, when you started to have an automobile, tried to get them to ban an auto and competition with their horses, and they went to try to stop that. So it's not unusual that it occurred in America in around 85. They had introduced legislation that if you were non-investment grade, you could not deduct interest. If you're investment grade, you could. If you weren't, you couldn't. And myself and one other person, Howard Marks, who eventually went to Oaktree, traveled around, and the person that actually took us around at the time to meet senators and people in Congress happened to be a man named Dick Cheney, who later became a vice president. But it was an amazing thing. We then analyzed all the states where they did not have one investment grade company in the state. I remember going to visit the single congressman from North Dakota and saying, are you sure this is what you want? He wanted to ban access to capital to any company headquartered in the state of North Dakota. And he told us, the citizens of North Dakota are willing to sacrifice to stop the scourge of junk bonds in America. So a lot of misinformation at that time occurred. And in this state of California, there was two politicians who thought maybe they could become governor, Kathleen Brown and Garamendi, by banning the investment in non-investment grade debt by CalPERS, CalSTRS, and pension funds. And Garamendi seized First Exec and to try to save the annuitants and the shareholders. But by the time the election occurred in 92, the people that bought the assets made $5 billion, and they discovered that job formation stopped because of what they were doing, and they reversed it, so that strategy was not successful, and they both lost for running for governor that year. So there are periods of time. Uh, Luckily, this period of disturbance in the late 80s didn't turn into the French Revolution where they went to the guillotine. Okay, they just used the press or something at that time. But
So basically, you had immense success in the 70s and 80s. Then people tried to constrain sort of the future development of the industry. They tried to sort of shut things down.
if you can't compete, okay, against an innovative, talented individual, then you might be able to compete by denying capital. I would say if you want to look at history, the most important period would be a year or two before 74 and a year or two after 1974. That year, the stock market went down 50%. The interest rates doubled. They put in credit controls. You could not loan money to a new customer. And the price of oil was the first oil shock. And you essentially had three types of organizations. One, someone like IBM that was a better credit than the bank. Two, those that couldn't pay you your money back. And three, those who were growing. And so you denied access to capital. The headlines at the end of the year were things like no one would ever buy a stock again, all these type of things. So when you see those headlines, you know it's now time to invest in the market. But you made 100% on your money on straight debt between 74 and 76. And so not everyone agreed. As you know, when you go out with your first fund or you want to raise money, a lot of people say no. They want to see you wait till you get to the second. So all those people that said no to me from 1970 to 75 were much more interested in 76 at that period of time. And so I'd say you could buy bonds in 1974 for their coupon, literally their coupon. You got 100% current yield on your money if they made two interest payments. And so it was an amazing period. The same thing occurred again. I never thought it would occur in my lifetime. Occurred around March of '09 during the financial crisis. You literally had securities trade that were paying interest for their coupon again. And if I wanted to give you an anecdotal story, in 1974, an individual, a professor who has become quite famous with his scores, was on a panel with me at the Institutional Investor and predicted 700 of the 2,000 largest companies in America were going to go bankrupt. We were on the same panel in 77. I don't think anyone was there in 77 who was there in 74. And he pointed out how he had predicted the four major bankruptcies that occurred. He didn't bother to say he had predicted 700 people would fail to get the four. So he had a pretty wide sample to pick from. So there are periods. Today, the market is much more sophisticated today than it was then. And so you have, when those that want to sell, there's plenty that want to buy. And one of my objectives was to create, as I said, 10,000 people who can make a decision on whether you had access to money or not 10 deciding who got money and who didn't. And I would say to you, the toughest industry of all to finance was mobile.
Because you were involved early on the different aspects of telecom. I think MCI was one company you backed, and then there's other things that you really got behind. Do you want to talk a little about that in terms of really helping push forward that industry?
Well, MCI's story is a very interesting one where if you loan money to MCI, you were blackballed by AT&T. It was the largest company. It was the largest payer of fees. And if you loaned MCI a dime, that was it. You were put in the penalty box forever. And it took about 4 years for me to convince my own firm we could trade their debt, but I couldn't raise any money for them. And I told them, I understood how they felt, but I've analyzed the situation. AT&T only has 1,000,004 employees. MCI, I don't know, at the time had 90. And I didn't think it was fair because I think AT&T would need 2 million employees to offset Bill McGowan. so that the scales were tipped against AT&T by just Bill McGowan, and we let us finance them. And 3 years later, AT&T was broken up. Everyone in this room is too young to remember when you had to pay $12 a minute for a long distance phone call, when your weekly wages were $150. So I asked Ken Griffin a while ago, uh, how much is his telecommunication bill? Told me he has absolutely no idea. It's less than 0.1% of whatever his expenses are, and he doesn't even look at it. Then I was very focused back then in what our telecommunication bill was.
You backed a lot of the giants of industry across the 70s, the 80s. You helped really pioneer a lot of the different instruments that were used by the private equity industry. Was there anything in common in terms of who you backed? When you decided to get involved with a company, was it based on product market fit and the scale of the company? Was it the entrepreneur behind it? Was it a mixture? I'm sort of curious about your framework in terms of the things that you did, because we talk about that a lot in Silicon Valley in terms of.
When you're right on the people, you're right. When you're wrong on the people, you're wrong. And so everyone has a plan, and that plan might be good for a month, might be good for 3 months. Some of the circumstances change. You need to have someone to have the insight to, maybe it just needs a small course correction. But whether it was John Malone or whether it was Steve Ross, or I remember when Steve Wynn limped into my office. Let's see, I was 32. He was maybe 39, and I saw an adult Walt Disney.
Mm.
Okay. Here is a person that could create themed resorts and things for people that want to go to them, want to gamble. I told him he needs to buy a pair of tie shoes. He didn't have any tie shoes, only had loafers. I told him, we're going to New York and we're going to talk to a lot of very conservative people. And if he could just get a pair of shoes that have tie shoes, we'll have a higher probability of success. But you could not compete with Steve Wynn, whether you were MGM, wherever you were. He had better ideas. He motivated his employees. He built better facilities. You could probably copy those facilities 3 years later, but you couldn't copy the interaction with his employees. So 1 decade when you were considered, you couldn't finance the gaming industry because everyone was supposedly in the mob. By 1988, his company, Mirage, was the second most admired company in America. And it was most admired by customer reaction, customer retention, the customer experience was so much more than any other company. So to me, and when I look back, it's always the people. There are lonely days when no one necessarily believes it's going to work, and you have to have a lot of fortitude. But generally, the people. I'm Craig McCaw. The cellular industry was accelerated dramatically by Craig. He was going to Stanford. I think his father died. Went back to the family company, and he believed in mobile. I believed in mobile because I was a Star Trekky guy, and Captain Kirk always told Scotty to beam him up, and his communication device was where he was, not that you had to go to someplace to communicate an idea.
And I think this was at the time when McKinsey did a famous study where they
Well, you were well
extrapolated.
prepared on this subject.
I started the mobile team at Google, and so I remember working on a lot of these really early things in terms of the transition to smartphones, and it was sort of a similar argument that people would never want to search on their phone or do things on their phone. So even later, there was this pushback.
So did you read the McKinsey study?
I went through it, and it was kind of amazing because I think they predicted that the entire market size would be what? It was 100,000 or a million devices.
Predicted 1 million people on the entire planet.
Yeah. And it was a failure of technology, right? They didn't extrapolate out the cost curve. They didn't extrapolate out the devices,
By the year
Yeah.
2000, and they'd be paying $1,000 a year, and the entire worldwide market was 1 billion. And therefore, AT&T, who invented the technology, they advised them not to go into the area. This is one of AT&T's. They made two $1 trillion mistakes. This was their first one. But
What was the second one?
the second one is when they were forced to break up in 1984, they could keep all the Arbucks, all the regional, all the customers, or they could keep Bell Lab. And they elected to keep Bell Labs rather than all the customers. So now they needed the people they spun off to connect to them in order to connect to the customers for long distance. And so that cost $1 trillion. And AT&T today, as most of you probably know, was bought by one of the 7 companies they spun off, Southwest Bell. So AT&T isn't the old AT&T. It's Southwest Bell, who then bought AT&T and changed its name. And in the early 90s, they ended up going to buy McCaw to get into the cellular business. So if you wanted New York, the franchise for New York, I'll tell you how much people thought of mobile. It cost you $10,000 to apply for the franchise in New York or San Francisco, etc. Then, of course, you needed money to build it. And so Craig family, I think, had television, radio, cable, all these things, and told Craig if he doesn't want to get deluded into oblivion, if he really believes he has to sell everything he's got and bet all in on cellular. I also told him, why did he go to a veterinarian when he needed brain surgery? And so no one was willing to loan him money. I did not know him, and I was maybe his 10th stop, but the first 9 all turned him at that time. So they were selling 900,000 phones a day when AT&T predicted the entire worldwide market was 1 million. So they missed the
And then I
mark.
think AT&T bought them for 20 billion, was it, in the early 90s? Something like
Yeah,
that.
well, they had a lot of debt, so it
Yeah.
was more than that, but that's what they bought them for.
And then, so you backed these giants of industry, right? So you backed McCaw, you backed John Malone, you backed Steve Wynn. Are there common characteristics that you see between those people, or things that you think great business founders have in common?
I'd say quite often they're outsiders. Another industry I financed most of the people in was the entertainment industry. And most people would be very surprised if they knew that 80% of all the major media companies that grew up in the 30s, 40s, 50s, the founder lived within 200 miles of Warsaw. So Warsaw could have been the entertainment capital of the world. There was a few problems in Warsaw during this period of time. And so they came to the United States. And then World War II broke out after a while, and they wanted to put out things that were uplifting for people, those musicals and everything that came. But whether it was Louis B. Mayer or Jack Warner or the people that founded Universal or Columbia, and all were outsiders. And to me, that industry today, for the most part, lies inside of Amazon, Google with YouTube, etc. And most of those founders were outsiders. They were not people. They weren't Rockefellers, etc. And so,
But are there common traits or characteristics? Because when I look at some of the things you described about yourself, it reminds me of a lot of the great founders that I backed. So a lot of the great founders that I backed, for example, have reached out to somebody who wouldn't likely return their letter when they were really young, and many of them would get responses. Or they'd ask for a scientific paper when they were 13. They'd email people or mail people. They would be first principles thinkers, just like you were talking about getting to know the bond market rapidly and realizing or concluding people are wrong. They would think for themselves. They'd be contrarian. You moved your operations to LA from New York when nobody had finance operations in LA. And so you actually share a lot of the characteristics I would look for if I were looking at a founder. Are there others that come to mind for you in terms of, besides being an outsider, what some of these outsized
I
people
think
do?
um, Neil Ferguson, when he used to teach at Harvard, maybe the leading historian today, tried to find out who got into Harvard because of their relatives and who got in because of their ability. And then he told me he could do that within a week. Uh, and then he tried to figure out how long would it be before the person who got in because of their relatives was working for the person that got in on their ability. So it's very hard to pass that from one generation to another. It's hard if you didn't have challenges in your life, if you didn't suffer, if you it's very hard if you're born into money to have that same hunger to change things. And that's why you find very few family-owned businesses exist after the third or fourth generation. And so a company like um, Hearst exists today because I believe William Randolph Hearst in his will had that no Hearst could be the CEO of Hearst.
Mm.
And so if you think about it, you have a company and now you're limiting your next leadership to your children. You have to disregard 8 billion people on the planet. You only have a handful. And so maybe one generation and then the next generation, it's very difficult. And I would say when I look at people that approach us on a philanthropic basis or have ideas today, most of the time they are first generation. They went to school, the first generation. They're immigrants to the country. It's just hard to get that fire in your belly passed from one generation to another to another. You know, you're not going to the airport. You have to go through security. You have to get there an hour and a half ahead of time. You're going to a private plane. You know, it's tough. So I would just say
Mhm.
um, I want to make sure that the person has hunger. And in the fourth quarter, the third quarter of late third quarter of 1987, when the stock market went down 20% in one day, I didn't have to look around the room or the world to find out who was at their desk at 2 or 4 in the morning, figuring out how we're going to deal with it the next day. And so they are driven. They want to change the world. I would say in finance, it's discouraging to me a little bit today when I go talk to the classes of the 70 or 80 firms that were headed by people that used to work for me. And I asked them, how many of you went into finance to change the world? And 1 or 2% might raise their hand. So it's disappointing. You know, I quite often want to know why you're interested in this field, why you're going into this. You find in medical research, quite often you find people went into it because they couldn't save their parent's life. A relative got sick. They lost a brother, a sister, a loved one, a next door neighbor. You know, I tried to save my father's life in the mid and late 70s unsuccessfully. I concluded that science could not move fast enough in the 70s. And it wasn't until our Melanoma Research Alliance, which was formed in '07, till we had the treatment in 2012 that could have saved my father's life, who died in '79. So today, with technology that you know personally very well, there's a chance actually to find a cure for a person in their own lifetime
Mhm.
who has a life threatening disease. But back then, you had to have a lot of running room to try to find out what you're going to do.
One thing that you're working on now, and I think this really touches on a thread of philanthropy that's gone throughout your life, and obviously the Milken Institute and some of these foundations you've set up are prominent examples of that. Do you want to talk a little bit about the Center for the American Dream and what you're doing there and what your focus is?
So I think it was '08 or '07, I became concerned about the future of the country. I had this idea. I bought 620 acres in Malibu overlooking the Pacific Ocean and Pepperdine, and was going to build this thing there as a symbol of hope to the world. Except the people in Malibu don't like you to build anything quick. You know, it might take a generation, more than one lifetime. I actually had my representative tell them that the owner was okay with he would never see anything in his lifetime, and the owner's kids were okay, but the owner's grandchildren were sure that something would be built. But they limited the number of people that can visit, so I then went to DC. And so we bought in 2014. We started buying every building on Pennsylvania Avenue, across from the White House and the Treasury. It was known as the People's Street. Mm. But because of how things evolved, the people could not go into any building on the street. And so slowly, unless you could get through security. And so my conclusion was we would build it here. We're opening after 12 years and really have two objectives. One, it's a symbol of hope, not just for the US, but for the world, that upward mobility exists based on your ability and your persistence, not whether you're a man or a woman or whatever your last name is or where you went to school, even if it was a PhD from MIT, or what you believed in, but you had a chance that some place existed as a symbol. And on July 4th this year, we are going to uncover the ley light for the first time in 83 years that was covered after Pearl Harbor, where you could not have light in D.C. at night after it was dark to protect against bombing of D.C. And so that's the first thing. And the second was to record 10,000 stories so that you could find your American dream, your story. If you were born in the slums of Calcutta, you could find someone that was born in Calcutta who rose up and became successful. So you could find someone from where you lived or a career you wanted or didn't know their father or got a life-threatening disease at a young age and then succeeded. So those are objectives, that you will find a person to energize your own dream and that we will be a symbol of light and hope. And so we want to make sure we shine brightly on the White House so it sees a bright light, the Treasury and other things. But there's 6 million people today that still walk down the street, and we look forward to welcome them, and 100 million online when you help us figure out how to do that, right?
Yeah, no, it's very exciting. It's very inspiring. How do you think about what you want? So say it's 20 years from now and you're looking back and you're thinking about legacy or things that you still want to establish, or because you've done so much. And so I'm always pleasantly surprised by people who have such an important arc for decades. And I think there's a handful of characteristics that seem to be in common for people who do that, but then they just always keep going. What do you view as the next decade, or how do you think about the next set of things that you really want to focus on? Is it things you've already done? Is it new things? Is it a mix?
There's always new. I used to have the firm try to stop me, but every afternoon, I you were not allowed in our trading area from, say, 6 in the morning to 2 on the West Coast. After 2, you could come and visit, or a little later. So you had to be in generally between 4 and 5 in the morning, or you could be in late in the afternoon. And I always wanted people that had the craziest ideas to come and tell me their idea. And we have this session at the global conference every year, things that will blow your mind. Things that non-invasive surgery many years ago. So things you can't even believe you could do. And if you're not listening to those, then you're really not going to see the future. Those that are willing to challenge whatever the status quo is today.
Are there any gaps like that that you feel exist where I know you identified, for example, a major gap in finance or access to capital and how to democratize that?
I think in healthcare, a major gap. We had a session in 2011 on how to innovate innovations in medical research. How could we accelerate them? And so in Tahoe, I had this group with 84 people who had changed industries, changed the world, and the head of the FDA and the head of the NIH and so on. And the outcome was there was a lot in basic research, there was a lot in clinical, but it was the translational research from the bench side into a human that delayed everything. And so I think the event was in October or September, and 3 months, 2 months later, President Obama signed into law the creation of the National Center for Advancing Translational Science. So we needed to beef up translational science. It cost about $5 million on a philanthropic event to put this program on, and the federal government committed $6 billion 2 months later. So we had a rate of return that maybe even you would be willing to accept.
I think yours is
But I think there's always, I would say to you, we've created this new entity called the I brought you a coffee, Economic Mobility Alliance. And we've been looking at the fact of the concentration. One of the side effects of technology is increased concentration of wealth. And so the U.S. has the highest average net worth because you're averaging people worth over 100 billion. But it has a relatively low median net worth to other countries, Australia being substantially higher. So I would say to you over the next few years, I'm looking forward to implementing a strategy that every person feels they have a stake. And so I believe we have a good chance in the next 2 months to get in and Invest in America, which is everyone born in the country gets $1,000 when they're born. And if we set these accounts up, there's no fees, no management fees. They buy the S&P 500 and no charges, and you can't take your money out till you're 18 or 20. So the money is going to compound away. And others can put money into this account. So one of the individuals has just committed to give $4 billion if this is put in place, which will be $1,000 for the 40 million kids that are under 10. And there's companies now that employ millions of people that have agreed they will put money in these accounts for all the children of all their employees. And so if you travel to Australia, the people are generally very happy because their retirement is assured because of the superannuation. So I think there's many efforts on this. Another one of our efforts we launched about 9 years ago was the World Bank IFC Scholars. And we concluded we needed to create financial experts in the emerging countries that hold most of the people in the world so that they could figure out how to finance and create jobs in those countries rather than having them immigrate to here or other countries. And so we're up to about 300. Our goal is to create 1,000 of those that we did. So I think there's a number of programs, and my feeling is if we believe that the free enterprise system lives 20 or 30 years from now and is meeting the needs of the people. In 95, we did a study in Europe of do people feel the financial system is working for them? The answer was generally no, but they didn't care because they didn't expect it to be working for them. In the U.S., the vast majority said it was. Today, a large percentage of the people, not majority, but a large percent, don't feel the system is working for them. And so I would say I would hope in a decade that 80 to 90% of the people feel that the system is working for them. So that is a project that I hope will be successful here.
Yeah. No, it's very inspiring. I mean, I guess with Invest America, you're basically giving people a stake in the compounding of the main stocks that, are largely both US based, but also just driving that view that capitalism is useful for people, free enterprise is useful for people, but they have a stake in the future. And so,
So if you go to Indonesia, capitalism has like a 25% positive. Entrepreneurs are 85. So an entrepreneur is very prestigious. Our goal, it's not just the government. We think that this is an effective way for people to fund, whether you're in their school, in the class, whatever it might be. You're seeing this starting to occur in medical schools where UCLA, NYU, others have given money so a large percentage of students can go free from those standpoints. And I think if it happens here, it'll happen in many other places in the world so that people feel they have a stake in society. I think if you say to me, what has historically differentiated America from other countries has been a chance to try and fail and try again. Many places in the world, if your idea didn't work, you don't get a second chance. Here, it's a lot safer to invest and back people whose first idea or second didn't work, and so that they're not failing when you invested, but they learned a lot. You learn a lot more from things that don't work than things that work. And Babson, which I still think is rated the #1 entrepreneurial school in the country, part of your assignment there is you have to go in business, create a company, and put the company out of business. So you have to have the experience of what it means to liquidate something, both to start and to end, while you're an undergrad.
Mm.
A lot easier to deal with that than later in life. So
Great. I have, I think, probably 2 days more worth of questions. But I think maybe what we'll do is we'll open it up to maybe 2 questions from the audience. And then Mike has kindly agreed to stick around for maybe 5 minutes after that to chat with people one-on-one. And then we'll kind of wrap
so to learn something.
and to learn
And
something.
next time I'll get to interview you, maybe.
No, I don't think everybody wants that.
I doubt it. I doubt it.
So, Sandeep? Yeah.
It'd be great to hear your perspective on financial current events. What do you think about our current national debt? What do you think about tariffs and trade wars, ongoing inflation, so forth?
And for context, Sandeep was the CPO at Uber and ran all of product engineering design, so a multi-thousand person organization there.
So I have a little different view, and then many do. They're very focused on balance of payments and trade. I'm very focused on the movement of people and knowledge. So Kevin Murphy and others tried to estimate what is the social and human capital of the U.S. worth. A low end 1,500 trillion, high end 3,000 trillion. So what I see is the U.S. has had a massive transfer of hundreds of trillions of dollars of talent for a long period of time, at least a few hundred years. And so the best and brightest come here. They find businesses, and I interviewed last week Jensen Wang. He came from Taiwan. When he came, really the only place was probably the U.S. to do it. Today, you may be able to do that in the UAE or other places in the world. And so what I worry about is our actions hurting brand USA, a student making a decision not to come to school here. If you're a Ray Bradbury fan, you know that if you stepped on a leaf 100 million years ago, you changed the whole history of the world. So that student that didn't come here and went someplace else is going to change the future history of the world, that outlier. And so it was my feeling we could have paid off the debt of the country, and I did sampling, if we provided this golden ticket. You were not a citizen, but you can come here, you could stay every day, and we would not tax you on your foreign earnings. And if 10 million people wanted to give you 3 million for that ticket, I went and sampled how many would pay 10 million or 20 many would do that, but you could pay off the whole debt. So the desire to live here and spend time here, the brand was so valuable that you could pay off the debt. So I'm just concerned that we're not looking at the right numbers here, etc. And today, the most millionaires now move to the UAE instead of the US. And the other one is Singapore. So the first thing is, what if you have a brand, you can always raise money. And so but in the Clinton administration, if you were in the trading desk in the 90s, you were worried that there weren't going to be any more government bonds. They're going to pay off all the government debt. Less than 30 years ago, that was a fear. Obviously, that's not a fear today, and we're worried that we are mortgaging the children's future here financially. But we sometimes forget how valuable real estate or location in the world is. So when Greece was in trouble, I tried to have Singapore pay off the debt of Greece, 100% of the debt of Greece. Just one island, Singapore West, okay, located near the Mediterranean. They could build another Singapore. Greece, at the end, didn't go for it. They were willing to let them invest in everything, but they were not willing to give up sovereignty from that standpoint. In 1985, 6, and 7, I created a consortium of people that we would pay off the debt of Mexico. It was about $54 billion at the time, in exchange for a 99-year lease in Baja. And we would agree to invest $1 billion a year for 99 years and then turn it back to Mexico. Discussions are going pretty well for about a year and a half with Galo Madrid. And then I walked in a meeting and we were no longer speaking English, and now I had translators. He spoke in Spanish. They translated for me. I spoke in English. They translated into Spanish. And I turned to my partner. I think this is over. This is over. But we ended up swapping the debt of the country for businesses, etc. And it became a fund at Trust Company of the West, TCW Americas. And a person that worked for me ran it for another 20 years or 30 years. But so I think there's always a large potential transfer if you want to live in a place. I'll tell you one of the big mistakes I made once. The Prime Minister of India was visiting, and I was at the dinner. I sat next to his wife, and she was telling me how much she missed Santa Barbara. So we're in Los Angeles. I think that's pretty easy. I'm going to arrange a whole entourage, take her up to Montecito and Santa Barbara for the day, and she can have a wonderful time. And so I'd arranged everything, and I had someone call up her assistant and said, "We've arranged a wonderful lunch and everything in Santa Barbara today in Montecito." And she was talked to us, "What are you, out of your mind?" So he said, "Well, I had spoken to her and she said you miss Santa Barbara." And she said the soap opera Santa Barbara, not Santa Barbara. So when she's traveling, it was showing in India, she didn't get to see the various episodes of the soap opera Santa Barbara. So you never know. So I think the other thing is, I don't know who it's attributed to. Some people attribute it to Maya Angelou. They will forget what you did and they'll forget what you said, but they'll never forget how you made them feel. Okay? Unfortunately, we have a negotiating strategy of trying to make you feel bad. Okay? And then deciding, forget what we said, it's all off. Okay? So I don't know the issues that are going to happen. I was mentioning to Louise today, I used to play this game. If you knew the future, you'd be wrong. You could read the newspaper of the future and you made a decision what you would do. So last Tuesday, if you could have read Sunday's news headlines that said, the president is going to sign into law a 30 to 80% reduction in the price of pharmaceutical products in America. If you could have seen that headline, you might have decided you should liquidate your ownership of pharma stocks last week. Well, they went up 5 or 6% today, the same headline, but something else got involved in the process. And so my feeling is quite often we look at the wrong thing. I am looking at the human and social capital of the country and who's not going to come here that could have created a great company or a new idea or changed the world. We made it very hard for people to come to the U.S. to go to school here in the last decade. We couldn't even put on medical conferences in Toronto because many of the PhDs from other countries, if they left the country, couldn't get back in. So we had to have them in the U.S. So if you look today at what some think are the 20 leading bioscience universities in the world, I mentioned earlier, there's 2 in Canada, University of British Columbia in Toronto, both heavy influx of Asian students who might have come to the U.S. and other students. There's 5 in the U.K., Cambridge, Oxford, Edinburgh, Imperial College, University College London. There was 100 or 200 students from China, Taiwan, and other parts of Asia at Imperial College. 12 years later, there were 1,700 students. And when we surveyed them, more than half said they would have gone to school in the U.S., except they really couldn't get in, they couldn't get out, and it was just too difficult, and they wanted to go to school in English. So they went to the UK. Australia now has 2 of the top 20, University of Sydney and University of Melbourne. There's 1 million people of Indian ancestry now in Australia, and probably not too far behind from China.
So this kind of leads back to the golden ticket concept where there's both talent that you want here and then also people would be willing to pay here. And so in general, the U.S. is a big attractor.
And if you could figure out how to create an AI program, we could execute.
So we're actually talking with a company about running a summer program where we want to do a series of online tests or a battery of tests to try and find some of the most talented people in the world, however you wanted to find that, and then figure out some prize or mechanism to try and reward them with that. And so it'd be great to talk with you maybe more about that.
There was a professor at Stanford that said at a 1 standard deviation level, you could identify at 5 years old.
Mm-hmm.
I don't know if that's true, but I did have this theory that I haven't tested yet, that if a U.S. company replaces a U.S.-born CEO with a CEO born in India, I buy the stock. Okay?
Because that's how Microsoft, Adobe, Google,
IBM,
IBM, MasterCard. I'm hiring one for my business, so if anybody in the audience.
So I don't know if I haven't back tested that idea yet to see if it works.
We have Cal right here, ready to go. He's ready to step in. Yeah, to put me in. Yeah. Should we do one last quick question?
The highest per capita income of any ethnic group in the U.S. are people that were born in India.
Yeah. And if you want to introduce yourself quickly too.
Sure. My name is Jay. I'm a junior at Stanford. I also work for a lot at the moment. My question to you is that I don't remember what year you had said. I think it was like 2011, but you were saying that there was this bottleneck when you would talk to people in biomedicine, that translation was kind of the bottleneck for taking things from basic science to the clinic. And now there's a lot more efforts in the government. On the basic side, we have stuff like ARC Institute after the Patricks kind of saw that we could have, if you gave investigators more freedom, they could do stuff there. What are the bottlenecks you see today kind of in biomedicine from like funding? Is there stuff where it's like everyone, I know a lot of people complain about regulations from the FDA, but what do you see as kind of like barriers for innovation right now and all of that? So
I think we're going to be converting to where philanthropy plays a much larger role in medical research. It's estimated the baby boomers have 80 trillion. Not my guess is a quarter of that's going to go into philanthropy. That's 20 trillion at 5% in a private foundation. That's $1 trillion a year. At Milken Institute, if you go to events, it's hard not to hear me tell you that 50% or more of all economic growth in the last 200 years is traced to public health and medical research. And so it's not only the extension of life, but improvement of the quality of life. In 2 decades, you had a doubling of life expectancy in Southeast Asia. In sub-Saharan Africa here, you might see in some countries a doubling of life expectancy in 1 generation. So I see today computers, data, it's much different. So when I had these ideas in 1965, they had crisp tapes. There was actually records that you could go and look at of data. If you wanted to analyze medical data, you couldn't. There was nothing you could get access to. Nothing. I think today the UAE has or is about to sequence every single citizen. They'll maybe be the first country in the world to move to prevention. Tell you what your DNA is, what your microbiome is, how your genes might be expressed, how you could change your microbiome. And so I think we're at the beginning of the day when technology is going to play a much larger role here in medical research. I met Jonathan Simons in 1993 at Hopkins. He was considered one, along with Bill Nelson, they're two stars in bioscience and taking care of patients. Bill ran the cancer center and has for a long time. Jonathan then left and ran the cancer center in Atlanta, created by the family that founded Coca-Cola, and they're in Emory. He then ran the Prostate Cancer Foundation for 14 years. What Jonathan could do in one day at Hopkins in 93, a $5,000 machine can do 5 million times as much today. So therefore, you only could wish what to do. And so thanks to DeepMind and others, we're going to try to figure out, what happens. I have one of our scholars, University of Texas right now, that's building a human being in a computer. And so their idea is you're going to give that computer the treatment and see what happens with all their cells. So
This is the digital twins people talk about.
and so to me, there's a dramatic change occurring, and it's very hard for one generation that was not familiar with technology to be comfortable with what is available today. Andy Grove, who was on my prostate cancer board for 10 years, used to tell me he knows a lot more about the world, how to operate, what to do, but that PhD coming out of Stanford knows more today than he knows about what technology can do. So I see a dramatic change in philanthropy, picking up some of the role of government. Right now, it's ranged from 1% to 3%. It's going to be much larger. The largest foundation in the world is a medical foundation, Novo Nordisk, at $160 billion. The largest foundation in India is a medical foundation. Eli Lilly, depending on where the stock is either third or second foundation here in the U.S. 5 of the 10 largest foundations in the world are now medical. And Warren Buffett's going to have a $150 billion foundation, going to have to give away $7.5 billion a year. Gates, you saw, just announced he's going to give away in the next 20 or 30 years $200 billion. My guess is a lot will be medical. So I see the marriage of technology and philanthropy changing the landscape here dramatically in medical.
Oh, thank you. Great. I think we can wrap there. So thank you so much. That was amazing.
Okay.